Understand on-chain data in 1 minute, keeping you updated on 24-hour global crypto dynamics. The market opened lower on Monday and a further decline is quite possible. This week's volatility risk mainly depends on the US Fed's May 23rd decision on a spot ETF for Ethereum, which is unlikely to be approved. JP Morgan's double talk quietly getting on board the Bitcoin spot ETF. The battle between the SEC and CFTC over regulatory authority, the FIT21 act as the final arbiter. To be supervised by an international consulting firm for 3 years, is Binance compliance regulation really a wise move? Becoming a registered entity, Binance gains approval from India's Financial Intelligence Unit. Monetization of KOL content creation becomes a trend. SocialFi Game King battle sees a new favorite. The new SocialFi aristocrat leads the crypto KOL card revolution. How long can a viral spread last? Reevaluate the world's cryptocurrencies. Grasp the 24-hour wealth codes. Let's gradually get rich together. Monday, May 13th, so this is the Bitcoin TV channel, so how is the crypto industry? I'm Zoo. Let's first look at the 24-hour cryptocurrency headlines sponsored by Bitcoin. So this weekend, after touching a low of 61.80 at 145 on the 11th, Bitcoin continued to fluctuate narrowly around 61,000 over the 2 weekend days, repeatedly failing to stay above 62,000. As of 2 a.m. this morning, Bitcoin was at 69.39, down slightly by 0.1% in the past 24 hours. Ethereum fell 1.3% in 24 hours, with the price fluctuated around 2880. Apart from tron, which rose 1% in 24 hours, all other cryptocurrencies in the top 10 by market cap declined, with SOL down 5.8%, dogecoin down 4.4%, XRP down 2.9%. Last week, the trading volume of the Bitcoin spot ETF continued to decline for the first 3 days, dropping to a daily trading volume below 1 billion on Wednesday. However, trading volume rebounded noticeably starting on Thursday, indicating increased market liquidity and more active trading. Although Bitcoin experienced multiple sudden surges and drops of 2,000 and 3,000, its price remained stable above 60,000. In a wide fluctuation range of 60,000 and 70,000, 60,000 is an important level to watch closely. On Friday, the Bitcoin spot ETF saw a net outflow of 84.7 million, and the selling pressure from Grayscale's GBTC has returned to over 100 million, clearly suppressing market sentiment in the short term. From 72,000 to the current level around 60,000, if Grayscale's GBTC continues to sell on rallies, it means that above 60,000 is also a range for Grayscale's GBTC to take profits, in which case Bitcoin is likely to be suppressed below 60,000 going forward. Looking at this week, one key observation that could bring volatility to the market is the speech to be delivered by Federal Reserve Chairman Jerome Powell tomorrow, May 14th, Eastern Time. As previously released, the U.S. employment data has shown signs of cooling. It has raised the market expectations that the Fed may still cut rates this year, so the market is also very focused on whether Powell will signal a more dovish stance on this speech. Morgan Stanley stated last week that the slowdown in job growth and wage increases means a soft landing, and if CPI also shows signs of easing, expectations for a rate cut in August could return to the market. Additionally, important inflation data like PPI and CPI will be released over the next 2 days. If inflation cools in line with the employment market, it would reduce pressure on the Fed. Otherwise, it will mean that high rates may persist for a longer period. Currently, the market is awaiting the positive catalyst of the approval of a spot ETF for Ethereum. As of now, the probability of a spot ETF for Ethereum being approved on May 23rd is only around 60%, which is not optimistic. Calling Bitcoin a decentralized Ponzi scheme and saying it's worthless, JP Morgan CEO Jamie Dimon often tries to gain attention by publicly bashing Bitcoin. But we've always told you, don't look at what the big players say, but watch what they do. In other words, someone who constantly publicly shorts Bitcoin may not actually be a real bear. but is likely trying to trick you into dumping your Bitcoin so they can scoop it up at the low price. Suppressing the market equals me wanting to accumulate. JP Morgan's actions contradict their words, as is the case here. So, as is well known, JP Morgan CEO often talks down Bitcoin in public, but recent news has slapped JP Morgan in the face.
According to a tweet by Bloomberg ETF analyst James Seifert, nearly 500 companies have disclosed holdings of Bitcoin spot ETFs so far, with BlackRock's EBIT holding the most, currently with 250 companies holding. JP Morgan holds a Bitcoin ETF worth about $760,000 US, including ProShares BITO, BlackRock's IBIT, Fidelity's FBTC, Grayscale's GBTC, and Bitwise's BITB. However, just as we applaud this longtime financial giant's entry into the circle, James Seifert poured cold water on it, suggesting that JP Morgan may only be a market maker or authorized participant in the Bitcoin ETF, rather than a true long-term investor.
This is the last time I've ever talked about this in CNBC, okay? So help me God. The last time I ever talk about Bitcoin is I defend your right to do Bitcoin. I think, it's okay. I don't want to tell you what to do, so my personal advice is don't get involved.
Previously, JP Morgan had been seeing the bear case that Bitcoin could drop to 42,000. Perhaps that's the level they were desperately hoping to accumulate at. Did they think that by seeing that tune, the market would oblige and crash to let them in? It seems that according to the disclosure JP Morgan submitted to the SEC, they didn't foolishly wait for the mythical 42K level, but had already quietly added exposure to the Bitcoin spot ETF early on. This tactic of feinting one way while striking from another angle has been skillfully employed by JP Morgan. As we can see, true investment whales always play by the book of timing the market, never letting themselves be shackled by the human weakness of being bound by their own words. So, EDU Chain has always advised everyone not to blindly trust any big names, gurus, influencers, KOLs, or all-knowing beings. The regulation of the US cryptocurrency market has long been described as chaotic for two main reasons. First, there is currently no clear regulatory framework or laws and regulations. Second, there is no clear determination of which agency will regulate the cryptocurrency market. Currently, there are three departments that can exercise regulatory authority over the US cryptocurrency market: the US Securities and Exchange Commission, SEC, the US Commodity Futures Trading Commission, CFTC, and the Financial Crimes Enforcement Network, FinCEN, which is responsible for combating domestic and international money laundering, terrorist financing, and other financial crimes. Among them, the SEC and the CFTC have been the fiercest in their battle over regulatory authority. To change the current situation, the US House of Representatives has recently begun preparing for a vote on the key cryptocurrency legislation, the FIT21 Act. If the bill passes, will it end the turf war between the CFTC and SEC over cryptocurrency regulation? Let's take a look.
The FIT21 bill is a critical piece of legislation in the United States aimed at providing a clearer regulatory framework for the cryptocurrency and digital asset markets, while also defining the roles of the US CFTC and SEC to strengthen market oversight and consumer safety. The House Rules Committee recently took a formal stance to consider the FIT21 bill. Congressman Dusty Johnson stated that regulatory gaps have existed for too long, and the United States cannot afford to lag behind other countries in this innovative field. The FIT21 bill will provide clear regulatory authority to the US SEC and CFTC. Congressman French Hill expressed more direct support for the FIT21 bill, stating that as demonstrated by the collapse of FTX, the United States needs a robust regulatory framework to ensure the safety of the digital asset ecosystem.
This act has been hailed as the journey to break the ice for regulatory clarity in digital assets. It will provide a strong protective umbrella and regulatory certainty for the booming US digital asset ecosystem. Not only will this act clarify the role positioning of the US SEC and the Commodity Futures Trading Commission CFTC in the regulation of digital assets, but it also a critical leap for the digital asset market towards maturity and standardization. due to the SEC's previous regulatory enforcement and the legal challenges in the crypto industry, there was a perception that the CFTC might be a more crypto-friendly regulator, leading to the view that more regulatory authority should be given to the CFTC. However, in last year's enforcement actions against the DeFi projects, the CFTC gradually revealed its true attitude, which could potentially have a devastating impact on DeFi. Under these regulatory conditions, there is an urgent need for a decisive act to prevent the crypto world from continuing to be dominated by a single entity that can impose penalties as it sees fit. In November 2023, CZ, Zhang, and Binance pleaded guilty to money laundering and other federal charges and were fined $4.3 billion by the US government. As part of the plea agreement, the US government required appointment of a third-party company to oversee Binance compliance for the next 3 years. Recently, the US Department of Justice (DOJ) appointed international consulting firm Forensic Risk Alliance (FRA) to serve as this overseer, ensuring that Binance complies with regulatory requirements over the next 3 years.
I think it's quite important for all stakeholders within the crypto ecosystem, especially in the industry, to bear in mind that our interests are very aligned with actually those of the policymakers as well as regulators, right?
Following the resignation of Binance co-founder Zhao Changpeng and a $4.3 billion fine imposed on Binance, the treatment of the exchange varies in different regions. Recently, Vivek Agarwal, head of India's Financial Intelligence Unit FIU, stated that Binance is now a registered entity and can offer its services in India. Binance was one of nearly 10 foreign cryptocurrency exchanges that received non-compliance notices in December 2023. Within 15 days of receiving the notice, the Indian Ministry of Finance directed its Information Technology Department to block access to Indian prohibited crypto platforms, URLs, and mobile applications by mid-January 2024.
India is one of the globally recognized most difficult markets to develop. Having fined Microsoft over 80 million forced IBM to pay back 580 million in taxes, repeatedly penalized Samsung Electronics, rejected BYD, and imposed new requirements on Tesla, earning it the nickname the graveyard for foreign companies, a well-deserved reputation. Despite India's crypto market frenzy, with a total size of nearly 6.6 billion, many crypto firms have stumbled in their attempts to enter the Indian market, including Binance, KuCoin, Huobi, Kraken, and 9 other cryptocurrency exchanges. Although India has accepted Binance, making it the second overseas crypto exchange after KuCoin to receive regulatory approval, Binance may still have to pay a $2 million fine for non-compliance before re-entering the Indian market. In early May, Fantasy.Top, a social trading card game TCG launched on the Ethereum Layer 2 network Blast mainnet, stands out with its unique selling point and distinctive feature of alternative monetizing KOL content creation. Similar to Friend Tech, the game features over 100 unique hero cards based on renowned traders, investors, analysts, and content creators in the crypto industry, including Blast founder Pacman, trader Ansem, brother Maji, Huang Lichen, and Suzu, the co-founder of 3 Arrow Capital. Upon its launch, it caused a frenzy in the entire crypto community, driving a surge in transaction volume on the Blast chain and becoming one of the most profitable protocols or applications in the crypto space.
As one of the 47 winning projects in the Big Bang competition launched by Blast, Fantasy.Top ranks 6th in cryptocurrency protocols by fees and generated revenue. According to data from the blockchain analytics platform Parsec, since its launch, Fantasy.Top has consistently topped the Blast by Gas Trend contract leaderboard. As of May 9th, 60,000 card packs, 300,000 cards have been minted, with 224,000 cards traded on the secondary market. The Treasury has accrued $10 million US, and the initial distribution yielded nearly 800,000 Blast Gold, with a total of 292,000 distributed to players.
Amid the recent market cooldown, Fantasy.Top's surprising emergence undoubtedly showcases the robust growth potential and momentum. From the game's core design perspective, its main user persona is the crypto-native Twitter community, while many crypto-related projects are touting mass adoption as their goal. Fantasy.Top has instead focused entirely on the crypto world's niche, cleverly leveraging the industry influence of crypto KOLs. However, users should be cautious about whether such projects have a robust fairness mechanism in place and whether they are merely short-term hype. In any case, Fantasy.Top's viral spread has only just begun, and this crypto aristocrat still has many issues to resolve. Will it continue the revelry or eventually return to calm after noise? Its future trajectory remains to be seen.
According to a threat report by cybersecurity company Kaspersky on May 9th, North Korean hacker group Kimsky has launched a series of targeted attacks on at least 2 cryptocurrency companies using the newly discovered malware named Durian. Ripple CEO Brad Garlinghouse recently stated in an interview that the next target of the U.S. government is Tether, the stablecoin company responsible for circulating USDT. Despite a decline in Bitcoin prices, data shows that the premium in South Korea has decreased but still remains approximately $1,800 to $2,000 higher than the global weighted average price of Bitcoin. The South Korean won accounts for 2.07% of the total Bitcoin spot trading volume, second only to the US dollar. Recently, Himalaya has submitted an application for listing to the Hong Kong Stock Exchange with Goldman Sachs, Morgan Stanley, and CICC as joint sponsors. The Securities and Futures Commission has indicated that Himalaya needs to provide further clarification on whether its operations involve virtual asset trading and disclose the percentage of virtual asset income and its compliance status. According to data from the Ethena official website as of May 12th, the reserve fund of the stablecoin protocol Ethena has reached $38.7 million with an increase of $6 million in the past month.
Alright, that covers the main content of today's program. If you find our channel valuable, please feel free to share and follow us. You can also become a member by clicking the top right corner to see our membership benefits. Our channel focuses on curating valuable news from the crypto, blockchain, and mining industry. News and information from Monday to Friday